Hello, this is the tradesight market preview for Friday, April 5th, 2013. Just wanted to take a brief look as we head into the last day of the week at some of the factors that we've been watching this week and see what we're expecting for Friday. Here's a look at the E-mini futures contract on the S&P 500. This is 5-minute bars. You can see this is basically most of the week. So you got Monday, Tuesday, Wednesday, and Thursday. We are down about 10 points for the week so far. Which is not a big deal. You can see that Monday we opened flat, drifted lower. Tuesday we got a gap up and actually didn't do much, closed about just a little bit above where we had opened. Wednesday opened fairly flat and headed straight down. We filled the gap from the prior day and then headed even lower. That was our strongest day of the week. We've had a real nice roll in terms of our stock trades. We've had starting last Friday and then even Monday and Tuesday and Wednesday this week, just a lot of great winning trades. Wednesday, we even saw, with the movement in the market to the downside, much improved volume, 1.7 billion NASDAQ shares, which is sort of like, I consider it sort of the minimum you really want to see in a day to expect that there had been decent movement, and we definitely saw the movement on Wednesday. So that kind of had my hopes up for Thursday, and unfortunately Thursday went the other way. Not only did we open with a small gap, which we filled here midday, but the range was a little more contained once again. To trade about 10 points worth of range total, 10 handles. And unfortunately, volume dropped off quite a bit to the second lightest volume day of the year at 1.35 billion NASDAQ shares during the actual core session. So that's unfortunate. It more than likely market's at least pacing itself for the data that's due tomorrow morning on a Friday. We've got a couple of big ones together. We've got the non-farm payroll data with unemployment rate. That's always a big number on its own, but we've also got trade balance. That's always a big number on its own. The two of them to be together, kind of a big deal. So there's going to be a gap most likely in the morning unless those numbers all come in exactly where they were expected to, and hopefully some action early off of the energy from those that reaction there. So I'm looking forward to Friday morning more than what I ended up seeing on Thursday, but Thursday is definitely the slowest day we've seen in a while. Let's pull up some of the daily charts of some of the indices here. So we'll start here with the, this is the daily chart of the S&P 500, and you can see shaking off a couple of 13 sell signals on the seeker over the last couple of weeks. Been on quite a tear here in the market over the last year, really, but even in the last, I don't know, since November or so, really been pushing up here. And it'd be interesting to see if this level can hold on the market. We've obviously seen some slowdown in volume since about mid-February. We're just drifting higher at this point in time, and seeing the volume that we saw today is not, certainly not ideal, not what you like to see. Let's take a look also at the NDX, which is the NASDAQ 100. You can see this has been fairly, again, look at this, talk about this over and over again. Look how January was so flat, a couple of gaps, but otherwise flat in February. March, a gap up early, and then look where we're at, just dead flat sideways. Take a look at Apple. It's one of the stocks we follow on a regular basis. There's a gap at $420 right down here. It was the low. Now this has been a gap from previous. We had left this gap behind right here at just above 420. So we came all the way down. That was back in January of last year, 2012. Came all the way down and hit that level, which was sort of the target we kept pointing people towards over the last few months, and hit that level down here. And then the next day gapped up and left the gap behind again at 420. So now here we are at 427.72. Can reach down and at least fill that gap. There's another gap back at 370. It's not as big, but something to be aware of, especially if you're an Apple shareholder. That there's a lot of stuff lower on Apple I'd be aware of. Google, on the other hand, has been heading up for the last few months and kind of down a little bit in March, and is at a very precarious position here. Although I would expect this red static trend line to be support if it does break to the downside here, and obviously. The problem is what we're seeing is that some of these indices look like they might be rolling over. Up to this point, we've seen a lot of rotation from one index to another, and one stock to another within the index. And here, I think we're starting to see some signs of rollover in the major indices. And while that'll be good, we'd like to get some action going, some better volume, and some better movement. Like you look at what the NDX has been doing for the last couple of months. Virtually untradeable from anything besides an intraday perspective, and so we'd certainly like to get back to a more trending market on the NASDAQ stocks as well, because right now it's a lot of the banks and such that are carrying the market. Here's a look at the semiconductor index. This is the daily chart there. You can see that so far has been contained by the 13 seeker sell signal, ran into the risk line and failed right off of that. And this type of a pattern does not bode well for the market usually. So let's just be aware of that. And for example, if I draw the trend line from basically right here to right here, you can see that we broke the trend line, came up and retested it and rolled, and that's never good. Now we're looking at breaking this support level right here. So there's a lot to look at on the downside here on the semiconductor index. Got to be aware of that. And finally, here's the biotech index, and you can see the very nice cup and handle formation that we had here that broke out at the beginning of March, basically, and it's been on a tear ever since. And they say banks and biotechs lead the market, so this has been really what's pushed the market higher. The stocks has not been helping. Tech stocks have been dead flat. A lot of money being exchanged there, one for the other, but here the biotechs have been leading the way. So if that starts to sputter, that's going to be your sign of what's to come for the market. And also, let's take a look at the small cap sector. This is the Russell 2000. And this has already rolled over. A lot of times this will lead the market. Now, the other thing to be aware of is we're approaching tax day, April 15th. That's often a turning point in the market. A lot of people pull money out right ahead of tax day if they're going to owe taxes. Obviously, the stock market's been up the last year, so there's probably more people that owe than don't. So that doesn't surprise me to see a little sell-off. And the Russell index tends to take a little hit right behind that as well. So it's been on a tear, the type of tear that you usually see in the Russell from the October-November area till April. It's been on a tear here for the small cap stocks, but could be coming to an end here with tax day. The other half of the year from April to October, so not usually the best for the small cap sector. So that'll be it for Friday. We're really going to be watching what comes out of those data points an hour before the bell and see what kind of a gap it causes and what it means for our trading. And other than that, we'll be in the lab helping you find the picks that you need to make money. Have a good night.